Investors, have you ever been turned down by a bank for you wanting to buy that dream piece of real estate that you just saw that you knew was going to be an insane cash cow, but you went to the bank and they're like, hey, no, we can't give you this loan. Well, I'm so glad you're here because I'm going to introduce you today the DSCR loan, the investor's dream. It's a no income investor cash flow loan that is going to allow you to start buying up properties like it's the '08 foreclosure and you have $1 million sitting in the bank. So stay tuned and watch the full video so I can show you how to make this happen. First, let's get into what the DSCR loan is. DSCR stands for debt service coverage ratio. What that means is simply if the debt service, which is basically the rent or the income you're collecting on the property, covers your full mortgage payment. Your full mortgage payment includes PITI, principals, interest, taxes, insurance, and any association fees. If your rent is higher than that total amount, then that means you cover a DSCR ratio. Now, why is it a ratio? Guess what? Because the debt service or the rent that you're receiving on the property is over your mortgage payment. Meaning that if I rent my property out for $3,000 and my mortgage payment is $2,500, that means I'm at about a 1.25 DSCR. That means that I cover the mortgage payment and then some. So I'm going to get some pretty favorable terms because the bank is going to say, okay, great. You're an investor. Property rents for more than what you're going to pay for it. That's a good property. I like what you're doing there. That's as simple as the DSCR loan goes. And if you like that, we're going to really be going in depth as to what the DSCR loan is, who it benefits, and all these things. But before we get there, I really want you to know that I appreciate you coming on this page and watching this information. If you could just go below and subscribe to my page, it would mean the absolute world to me because my mission here is to help self-employed people and investors just like yourself actually be able to buy homes that they deserve and really contribute to their financial well-being. So that's what I do, give you power through finances and power through real estate. So let's talk about why conventional loans fall short of what investors really want or why the banks are just telling you no, right? Number one is personal income required. You need to have income, proven income to qualify for any home loan or any conventional loan. Think about it this way. On a conventional loan, if you're trying to buy a home, not only do you have to prove that you can afford the payment of the house, even though an investor is going to live there, you're also going to be able to prove any and all income that you have. That means any investment properties, I mean any real estate, that means any self-employed income. And if you don't meet their specific guidelines, they're just going to tell you flat out, no, there is no wiggle room, right? Number two is their stick debt to income guidelines. So like I said, back to income. If your income on paper doesn't qualify enough to cover the house, even though the house is basically paying for itself, you're going to be basically shit out of luck, right? Number three is property limits. You do have limits to what you can purchase on the DSCR, right? On our DSCR loans, we're allowed to go up to almost 10 units, whereas a conventional loan, you're capped at 4. Most favorite is that my investors, generally speaking, just probably like yourself, just want to buy the property. They just want the home. They don't want to go through a 60-day process where they got to prove every little part about themselves. And I'll give you an example. Let's say that you're a self-employed individual. You own 2 businesses where you get your money from, but you also have another 5 properties as well. And you're looking to pick up your 6th property as a really good investment. Okay. As a self-employed individual, you got to give me all your tax returns from the last 2 years for both your businesses. For your personal, you're going to have to, your CPA is going to have to prepare profit and loss sheets for the businesses, balance sheets for the businesses, and going to have to pretty much make sure that you've declared enough income to support yourself. Now, not only do you need to give me that, but on the other 4 or 5 properties that you already own, you need to provide all the information on them. You need to make sure that you provide mortgage statements. You need to make sure you provide taxes, insurance. And if you haven't rented out, you need to make sure that that rental income, not only do you have proof that you're renting it, can't be collecting cash, you're going to need to have proof that you're declaring that rent on your tax returns, or I can't give you any credit for it. Yeah. Tell me how nuts that is, right? Well, that's what conventional guidelines are going to do. And if you don't have all that, or if that lengthy doc process wasn't enough for you, you need to make sure that you fit into the income, the debt to income, and all that crap together. So do you really want to be an investor going through all of that hard work? But let's talk about the benefits of having a DSCR loan and why they are an investor's dream. Number one, and the best one, is no personal income required. I don't care if you own 75 businesses. I don't care whether you make $1 a day or whether you make $10,000 every single minute. You don't need to prove it to me. That means you can declare whatever write-offs you want on your tax returns. You can declare whatever income you want on your tax returns without jeopardizing the ability to purchase some investment properties. Why? Because we're only income we need to make sure is that rental income covers the mortgage payment. How do we do that on a property that you're trying to buy? The appraiser goes out there. They're going to appraise what that property can rent for. That's as simple and as document intensive as it gets. Streamlined documentation is the only other thing that they're going to ask for is document. They're going to want to document you, your IDs, right? Who you are, make sure that you have a primary residence, just some simple standard stuff. But income and other properties, they're not really going to care about that other than your primary residence. No income means no DTI. Means that, hey, if you have enough money for down payment, closing costs, and reserves to buy $1 million property, then you go ahead and you buy that $1 million property, regardless if you make $0 a day. As long as you have the money and as long as the rent is covering it, you're good. Another thing is that we're not limiting you on the amount of properties that you can buy. So you can do DSCR month after month, year after year, and not stop. I'll give you the perfect example. I have an investor out in Texas right now who is buying up multiple of these properties. He's probably on his sixth one just in this year. On a conventional, you'd be capped and they'd be looking at it because they don't want you to finance all the time, right? And the beauty part is that he's using this DSCR program because he's a realtor who makes a ton of money. The problem is he's got a bunch of businesses, he's a realtor, and he doesn't want to show all these income processes. He wants to make sure he's already got his investment strategy, so he'd rather come in, show no documents, buy the property, and continue doing this month in and month out. Because if he had to show all of his income documents every time he bought a property, I think he'd go crazy and we wouldn't be able to close as fast and as quick as we do. Another thing is that faster closings. Yes, we're closing these in 15, 20 days, whereas a conventional loan on an investment property could take up to 45 to 60 days, depending on your situation. And the last thing that I love about this is my foreign nationals. ¿Dónde están mis extranjeros? Sí, mis extranjeros, si están mirando comprar una casa, es este programa perfecto para ti, porque no utilizan los ingresos y el crédito de usted, de tu país, o te deja comprar. Yeah, what I just said there was that you don't have to worry about any income, any credit. Why? Because most foreign nationals just don't have the ability to show that. Because again, they live in another country or you live in another country. So here's the perfect way for you to buy without any credit. And if you want to invest in the beautiful, robust economy of what is U.S. real estate, some of the strongest investment that you can make anywhere around the world. U.S. real estate, it's really an investment that just doesn't depreciate other than 2008 financial crisis. But if you want to put that into perspective, if you would have bought a home at the peak of 2008 financial crisis, you would still be over 100% in equity right now, because that's what real estate does. It's a long-term hold game to hedge against inflation, and it just affords you the opportunity to have financial freedom in the future. And that's what I'm here for. So if you're really enjoying this video, guys, I'm gonna please ask you again, just to subscribe below. My job here is to teach you the value of finance and the power of finance through real estate, right? Specifically, my self-employed and investors, I'm going to continue teaching you about these loan programs that are going to let you buy a home. Because when your bank says no, I say yes. Now, really quick, I've talked to you about the benefits of DSCR. I've talked to you about the non-benefits of conventional, but let's put them side by side, right? DSCR, no income required. Conventional, income is required. A lot of documents. DSCR, no DTI. Conventional, strict limits. DSCR, no financing, no cap on property financing. Conventional's got a cap of 10. DSCR, very quick, very easy closing, and a very faster approvals process. Conventional could take up to 45 to 60 days. Who wants to do that and who wants to be a part of that? Now, let's put together some real world implications of the DSCR loan in there, right? And here's the beautiful part about this. On one of the benefits of DSCR, it allows you to go in and buy some pretty funky property types. It allows you to buy condos that don't meet conventional guideline statuses. It allows you to buy buildings that are maybe up to 10 units big, right? It allows you to do a lot of these things. So I'm going to give you two real world analogies. Number one, I had a guy or a client trying to buy 5 properties. He literally told me, he's like, hey, I'm liquidating my stocks. I'm diversifying my portfolio into real estate and I want to buy 5 properties, and he was going to buy them throughout the year. He ended up going under contract on 4 at the same time. I shit you not. 4 at the same time. And I'm like, okay, great. Let's just do, you make great income. You have great amount of money. Let's go ahead and just use conventional because, why not, right? We'll get you a little bit of a better interest rate. It's something that you want to do. Maybe we'll be able to put less money down and go from there, right? Here's the most beautiful part about that. We were under contract and we had every single condition cleared except for being able to qualify because of the rental income. On a conventional loan, you actually have a limit as to how many properties you can buy at one time. You need to have them rented out. So we were at an impasse where the bank basically said, no, you can't buy these other 4 properties. You have to buy one at a time. And it's funny because he came to me from Chase Bank being denied, saying that, hey, you need to buy 1 property a month. And I said, no, you don't, not at all. And he came to me and we were stuck going conventional, and he was able to say, I was able to, hey, let's flip them to a DSCR all at once. We got 4 clear to close in 1 month, and he closed on 4 properties. He closed on actually $1.5 million of real estate in 1 month. I was happy. My realtor was happy. Everybody was happy, and he actually got great rates and was able to diversify his portfolio. So what his bank told him he couldn't do, we came and we did it anyways through the power of the DSCR loan. Here's my another simple, short testimonial that we have here. I had a client who is a salaried employee, so showing income has never been a problem for him. However, he doesn't have all the money in the world to buy whatever property he wants. Now, we found him a property and it was actually a condo. That condo was in a building with 4 other units. Only 4 units, meaning each unit was owned by 25%. This condo did not follow traditional guidelines whatsoever. I don't even think it could be financed. However, because of the DSCR's flexibility on property types and programs, not only were we able to qualify him, but we were able to qualify him with a minimum down payment of only 25% down. Whereas he would be looking at a different opportunity of something around a 35, 40% down. We also got him some really favorable interest rate terms where now someone who said, hey, I only have X amount of money to invest, we made it possible for him because we were able to use the DSCR's flexible guidelines, flexible property types to be able to purchase that home. So let's talk about how you can qualify for the DSCR. If you're actually thinking of using this program, if you actually loved what you heard, let's talk about what you need to qualify for this program. Number 1 is you're going to need the rental income proof. How do we get that? We're going to either, if it has a current lease, we can use that, or if the appraiser goes out there, not only are they going to give you the value of the property, but they're actually going to run the comparables of what the rental income will be. On a section of the appraisal, you're going to see, hey, this property can rent for X amount of value, and that's how you get it. The DSCR threshold. Now, generally speaking, for the best term and the best rates, you want to have a rental income that is going to cover your mortgage payment. However, if you decide to buy a property for whatever reason that doesn't cover the mortgage and the rental income is less, you can still buy it. You just have to put a little bit more money down. That's how flexible the terms and the program is. You literally can buy a home that doesn't even cash flow. Tell me how crazy that is. On a DSCR, you're going to want a credit score of as little as a 620. There are some cases that go to 599. There are some cases that go really low. But at the end of the day, I'm going to give a good rule of thumb. It's just a 620. It's just safe for you guys. Minimum down payment required is 15% down. Now, I'll be upfront with you. 15% down, probably very unlikely unless you're getting a really good term, because you do need to have other stipulations in place for a 15% down. That's for like your cream of the crop borrower. Rule of thumb is going to be 20%. 20% is a very good sweet spot where you want to be. On some other cases, you might have to put down 25%. But just remember this, guys. The more money you put down, the better credit, the higher the DSCR ratio is, just the better the terms are that you're going to get. So if you really need to put down 15%, you can. But if you can swing the 25% or you can swing a higher down payment to give you a more favorable outlook, I would 100% always suggest it. Just figure out the property type that we're in, right? If depending on the property type, whether it's a condo, single family, commercial property up to 10 units, these are all going to factor in into how you qualify, what money down you need to put, and what you want. So To keep it in the most simple manner, it's a very simple loan. You just got to make sure the property cash flows, you have a decent credit score, and you have the money for down payment, closing costs, and reserves. Make sure that's the biggest part. Down payment, closing costs, reserves. Down payment, minimum 15% down up to like about 25%. Closing costs, anywhere from about 4 to 6%, depending on how much money you put down. We could talk a little bit more about that. And reserves, you're gonna wanna have somewhere around 3 to 6 months. 6 months to be safe, 3 is the absolute minimum. So keep that in mind when buying a DSCR home. So guys, if you're ready to take advantage of this loan, I mean, what else do you need to hear? Investors, this is your dream. Zero money, zero income, zero docs supporting your income, and you could have your first investment property. So if what I described, the stories that I described, talk a little bit about you, talk about how you feel, talk about what you're looking for, call me today. Go below. My number's below. My email is below. My page is below. You can literally contact me a million trillion ways. Contact me, subscribe, like, do all of the above, because I want to help you. I want to help you grow your real estate portfolio and help you take care of the power of it, what it is owning real estate, and the power of finance through real estate. All right. Catch you on the next video. Make sure you like and subscribe. Thanks.